Hello, everyone. Today I'm going to be talking about the financial statements and a quick overview of the main ones. So taking a look at what we learned from chapter 1 and 2, it is very important to know the double entry accounting, where every transaction involves debits and credits, where eventually debits must always equal to credits. And it can be devoted using the formula assets equals liabilities plus owner's equity. And income statement, also known as an earnings statement, allows businesses to display their earnings and expenses to find out their net income. And then when it comes to cash flow statement, it allows businesses to better understand how much cash is available at hand and how liquid is it. And because of that, cash flow statements are always formatted in the order of liquidity. And what is meant by liquidity is how quickly are you able to get your assets into a dollar value or cash, in simple words. So how quickly is your money available for your use in the future? And when it comes to the equation of assets equals to liabilities plus owner's equity, it always has to be that equation, because if something is not matching in terms of liabilities, owner's equity is not it does not equal to assets, it means that your balance sheet is completely wrong and you made a mistake somewhere that has to be fixed. And that's basically the definition of the balance sheet and how it has to be computed, with debits on the left side and credits on the right side. And then you also can see this table on the bottom right corner, where assets, they get increased by an increase in debits, while it get decreased with an increase in credits. And it works oppositely for liabilities. So in order for liabilities to increase, it has to be deposited as a credit. And same thing with the owner's equity in this case as well. Now moving further to the trial balance. A trial balance is basically a type of financial statement that shows the debit and credit balances for each ledger's account. And the primary goal of a trial balance is to confirm that all of the debits and credits are equal in order to guarantee the correctness of the accounting records. And it is also very important to understand that trial balance is not necessarily a financial statement, which I'm going to dive deeply on the next slide. So here we can see the purpose of the trial balance, which is to have an accuracy check and a financial statement preparation. The key word over here is preparation, because it's not a financial statement. It's just a summary of all of your transactions that happen over a specific period of time. And therefore it can be used similarly. It is pretty self-explanatory in a way that it is simply a trial before you compose or create your actual balance sheet. And so when it comes to accuracy check, it assists in detecting mistakes in transaction posting and record keeping. There can be mistakes in the ledger accounts if the trial balance is out of balance. And that's what I mentioned before, where assets always have to equal liabilities plus owner's equity. When it comes to financial statement preparation, this is the initial stage that comes before creating financial statements, such as the income and balance sheets. Now we want to take a look at how is a balance sheet derived from the trial balance. And in this case, it is derived from 5 specific sections. First, the liabilities and assets, equity, asset balances, liability balances, and equity calculation. So using those 5 ways, we're able to utilize trial balance as initially, as I mentioned, as a trial in order to create the finalized and the most accurate balance sheet. When it comes to liabilities and assets, all account balances for liabilities and assets are shown in a trial balance, and liabilities are recorded on the right side of the balance sheet, and the assets are displayed on the left side of the balance sheet as debits versus credits for liabilities. When it comes to equity, the owner's equity, which is also included on the balance sheet, is calculated as the difference between the total assets and total liabilities, which can be displayed as a formula: owner's equity equals assets minus liabilities. And when it comes to asset balances, the balances of assets, including cash, accounts receivables, inventory, and properties, plant and equipment, are moved from the trial balance to the balance sheet asset section. And then when it comes to the liability balances, similarly, the balances of liabilities are moved to the liability area of the balance sheet, including loans, outstanding loans, accounts payable, and accrued costs as well. And lastly, for equity calculations, to get an idea of the company's financial situation at a certain moment in time, the equity section is computed by deducting total liabilities from total assets. And those are some quick formulas for you to understand how to compute specific or build out trial balances and balance sheets, and more specifically, how those calculations allow trial balance to basically evolve into a balance sheet that eventually the whole company is going to be potentially utilizing for their future investments. And yes, thank you for listening to this presentation. Here are my references, and thank you and goodbye.